This is the Scrap Metal and Commodities Recycling Report brought to you by BENLEE, Roll-Off and Open-Top Trailers and Raleigh Goldsboro Metal Recycling, February 15th, 2016. In this report, due to low metal prices, news remains very positive for manufacturers buying metals and remains very bad for recyclers as volume and pricing remains very low. Steel production in the U.S. came up a bit and is the highest of the year, but still well below historic levels. Oil rigs, major steel users, took another major step down as oil prices hit 13-year lows. The oil rig count is now down an almost surreal 73% from just 16 months ago. OPEC flooding the market with oil is having their desired effect, which is having the U.S. reduce our oil drilling. Scrap steel prices remain stable at about a third of what they were just 2 years ago. Since prices are up a bit and now stable, we are aware of some scrap yards that were holding metal for over a year are now selling at these low levels, will help keep prices low. Hot-rolled finished steel prices remained up a bit as well and are now down about 45% from their 2014 highs. There is no upward pressure on prices in the horizon other than possible unfair trade rulings by the U.S. government. Stainless steel scrap prices are staying a bit higher as well, but remain near their multi-year lows. Related, last week, U.S. companies filed charges against the Chinese for dumping stainless steel at these low prices. Looking at copper, prices plunged last Monday and then stayed fairly steady for the week, yet popped up again just this morning. And what's great news for copper buyers, prices continue to stay near their about 7-year lows when we look at this 5-year chart. Aluminum prices were steady for the week, with some upward movement. And when looking at this 5-year chart, we see stabilization at these multi-year lows. This chart shows major global uneasiness. Blue is the Baltic Dry Index, which is the cost of shipping cargo containers around the world. It hit a new record low last week. And at the same time, gold, also on this chart, had a major spike up in price last week. Related, about 12 hours ago, Japan, the world's third largest economy behind the U.S. and China, released that their economy's GDP declined 1.4% last quarter. Importantly, Japan is the world's second largest steel producer. Additionally, also this morning, China released surprisingly weak trade data. Imports plunged 18.8%. And yet at the same time, their exports were actually down a large 11.2%. Good middle-class jobs are a key economic driver for the U.S. economy. Sadly, while well-paying jobs in U.S. manufacturing are up a bit in recent months and years, they still remain down almost 40% from their high of about 35 years ago. The current cold weather in many parts of the U.S. has slowed incoming scrap to scrap yards and has been slowing shipments to steel mills. This could mean continued stabilization of scrap metal prices, but reduced scrap exports could put downward pressure on prices in the coming weeks. On positive news, as said earlier, oil prices hit 13-year lows. And while last Friday oil had its largest increase in years, low gasoline prices are finally helping major parts of the U.S. economy. Low gasoline prices helped retail sales in January be up a solid 3.4%, which is very positive news due to retail sales account for about 2/3 of the U.S. economy. With that, we hope all have a safe and profitable week. My name is Greg Brown.